Hi, I'm Stephanie Link, Chief Investment Officer at The Street, and here with me is Dan Dicker, our energy expert at Real Money. Dan, we want to talk a little bit about Devon and this Crosstex deal.
Right.
You like the stock. Do you like the transaction?
Yeah, I do like the transaction. It's instantly accretive, which, and Devon has always shown itself to be a little bit smart. But so going against the grain here, most of the other major companies, as they've been consolidating, have been playing this make an MLP drop-down game for various tax reasons. Devon was planning on doing exactly that, but decided to go the other way and do a merger with Crosstex, and you got to wonder why. Personally, I think that they're a really smart group of people. They're ready to turn the corner. They've incredibly underperformed most of the other E&Ps that are out there. They've got tremendous assets in the Permian, and I think that now is the time to actually, I recommended them early on in the month, and I think now is the time, especially today when energy stocks are getting hit.
Yeah, let's speak about,
maybe add up
let's
get on to that.
Let's talk about the energy decline.
Yeah, I've kind of tried to warn against a Brent TI spread that was blowing out, and what that implied was that for at least us with domestic E&Ps that we've been on since the spring, that we were going to see a relative drop in the value of domestic crude oil prices, and that was going to play into a very deep difficulty, especially going, especially after earnings for those E&Ps, especially the high beta E&Ps that we had been talking about and in some ways been trying to avoid. So the ones that have gotten hit the worst today are the really high beta ones, your Cabots, your Pioneer Natural Resources,
your Nobles, yeah.
Well, even Noble is not quite as high a beta as some of these others,
right.
That have specific plays into the wolf right. camp, or directly into a very small area of the Bakken. I mean, these are the ones that don't have the kind of cross section of assets, and when oil gets hit, domestic oil gets hit, they're going to get slammed.
So what do you want to do?
Well, I've been trying to warn people to try and stay away from the momentum players in the E&P and try to find whatever was undervalued here and jump onto those. And in that case, I've been recommending Hess. I've been recommending Devon, particularly because I think that despite the drop in WTI prices, these kinds of companies are going to report monster. And you want to be in them as the reports come out going into next week and into the early part of November. So that's my recommendation. Stay away from the high beta. I still think that the thesis has life in terms of being on E&P players, even though the average E&P is up like 45% for the year. I still think there's life left in it, but we have to be more careful as we watch TI and Brent get wide.
So normally, as it stands, you want to be more price selective, and you want to maybe be careful on the high beta, look for the opportunities in some of the more value underappreciated.
Yeah, even up here we want to talk value. That's what we want to do.
That sounds good. Thanks, Dan.
Okay.